All right, good evening, everybody. Happy Sunday. It's March the 6th, and it's about 6:30 p.m. here in Toronto. I'm your wealth guy. So let's talk money. Let's talk our Sunday market preview for the week. Now, we do have a lot of notes here, so I'm not sure if we're going to be able to get through all of it. I really don't want to make a video that's exceptionally long, but let's get started. So let's talk about what happened last week. So last week, we saw the banks take an absolute beating, and volatility, again, continues to be incredibly wild. You're swinging up and down 500 points a day. So let's start with the banks. Last week we saw a beating, and part of the reason that we saw that beating is because of the 10-year yield, which continued to sit low. Now, as of right now, with the 10-year yield, I'm not really seeing anything that's raising any red flags. I would like to see it a little bit higher, closer to 1.9, even maybe 2%. I know the banks at that point would also be performing incredibly better than they are right now. But now that we're on the banks are currently in the process of buying depressed or discounted assets. And in my opinion, I think the main reason they're doing that is because they do see that their markets are going to swing to the upside. And why not buy everything at a discount at this point rather than later? But if we take a look at the rest of the market last week, everything went absolutely parabolic. We saw commodities absolutely explode to the upside right across the board. Crude, as you know, was absolutely insane. Gold and silver, wheat, which was huge, we're going to talk a little bit more about that and what that means later on. But crypto was, aside from the general indices, was the only other asset class that actually sat to the red by the end of the week. But let's talk about this week coming, because this week, market volatility will most likely continue. Maybe not necessarily at the same level, because everything seems to be, for the lack of a better word, quiet abroad. That will obviously change throughout the week. However, for now, no new extreme reasons for volatility will actually come into play or has come into play up until now. We'll see what happens overnight. But as I mentioned, markets will most likely continue to be a little bit volatile with the news overseas. Crude, however, will continue to push heavily to the upside. And a part of the reason for that is Iran's discussions with Iran have been postponed slightly. So because of that, that is probably going to allow crude to continue to move to the upside. Gold and silver may take a little bit of a break here, at least in the early part of the week. Again, there's nothing really pushing it to the upside beyond the regular general volatility and momentum that we're currently seeing. Crypto will probably also have a quieter week, at least in the early part. Now, Thursday, this can all absolutely change, and that's because CPI as well as jobless claims will come out. Jobless claims, I never really expected to be good, regardless of what they say. However, inflation, I absolutely have zero faith in the CPI numbers. I think that we're going to continue to get absolutely annihilated with CPI. It's going to continue to go to basically all-time records for inflation at this point. Now, if we take a look at what the Fed will do later this month, so 15th, 16th of the month, everybody, and I think the markets are generally anticipating that there will be some kind of interest rate increase. Now, for the most part, I think earlier on, traders were thinking more about half a point. I think right now, the general consensus has pulled back to about a quarter point. I think it's going to be a quarter point. I've always believed it to be a quarter point. Now, the markets need to see something. I think if the markets see a quarter point, it'll be great. The markets will absolutely react to the upside, and markets will continue to push upwards or start to push upwards again, trying to push back to the highs. Now, if we get a half a point, could be a little bit trickier. I still think that's going to give us a little bit of positive momentum to the upside. Anything greater than that, which I really don't see happening at all. I think even 50 basis points is going to be significant. But if we do, that is actually, in my opinion, going to be a negative to the market. So let's see what happens on the 15th, 16th. Not that it's really going to do a difference. Let's be honest. Even at a half a point, it is not going to put a dent in inflation. And I really don't think that's the point. I think the point is more for market sentiment more than actual impact to inflation, especially when, as we find, it's really going to switch, or the narrative is really going to switch. It's no longer going to be about inflation as much as it's going to be about a cratering economy, as technically speaking, it is on the cusp of a formal recession in the U.S. Canada, you're really not that much better. But in the U.S. especially, it's really on the cusp of being formally called a recession. Now, in addition to that, Because we anticipate that inflation is going to be absolutely out of control, there are two big areas that we noted and have been talking about for quite some time, if you've been following me at least since the beginning of the year. January, I talked about it's going to really hit energy and it's really going to hit commodities. And that's exactly what we're seeing. So we are seeing energy absolutely balloon. Now you can expect energy to continue to go out of control, at least for the foreseeable future. In fact, I'm going to go so far as to say we are going to have a global energy crisis, which means if you are looking at sector switching, energy is probably the place to be. Commodities in general will be where you should be, because we are already noting that food costs are also exploding to the upside. Let's just look at wheat alone just this past week. We're seeing 7-8% per day minimum on wheat. Absolutely insane amounts of gains in the commodities market. I do think also in the long term, gold and silver will continue to play critical roles as safety, as well as alternatives to the market in general. But let's go back to what we're seeing as far as commodities are concerned. Now, for me, I am looking further into increasing my positions in energy, in particular, any crude and natural gas areas. Also, I am looking at general commodities. Now, I'm not touching certain general equities. However, there are a lot of ETFs that you can get into, or mutual funds that you can get into, where the fees are relatively low, but will allow you to participate in commodities trading without actually getting into futures contracts, which are very expensive and very difficult, complicated processes to get into, and trading methods. Now, if you do have anything, please feel free to message me. Otherwise, click the link. Would really appreciate you subscribing. If you like what I have to say, I've got a heck of a lot more information to go through, but I think that's it. We've already passed 7 minutes. That's longer than I ever like to do. But please feel free to subscribe. Drop me a message if you have any questions. Have a great day, and I will see you tomorrow at the opening bell.